Hey guys, this is Rudy coming at you live from Zurich in Switzerland, and right next to me is Debbie. Say hi, Debbie.
Hi.
I just wanted to talk a little bit about the election in the United States. Obviously, just a few days ago we saw Donald Trump elected, and the very next day the Dow shot up by like 1,500 points, and then it pulled back sharply after that. So one of the ways in which you can play the sort of Trump bump, which will be happening, but it will take some time because it takes the institutional investors quite a bit of time to get into the market and before we actually see their filings so that we can see what they've purchased. I can tell you with confidence right now that many of the institutional investors are putting a lot of money into SPY, that's SPY, and if you've watched some of my videos before that are mostly related to energy, you'll know that I talk about ETFs from time to time, including VYM, which is one of my longs, and the other one's XLE, which is specifically an energy ETF. ETF being an exchange-traded fund. So if you don't have a single stock to buy, or you want to mitigate the single stock risk, then you can buy the ETF and just hold that. And you can even view that as cash awaiting investment until you find a nice deal that you could possibly pick up, on which you can make a nice return, 5x, 10x, whatever the case might be. But you can park money in the ETFs. So a couple of them I want to mention. So I've just mentioned two of them already. SPY is tech heavy. It's not a bad ETF to get into right now. Institutional investors and hedge funds are putting billions and billions of dollars into SPY. You'll see that as we go through over the next couple of months and we see their filings, the SEC filings, as they become available. The other one that you can hold that gives you a little bit more diversification and a very high dividend yield is VYM. It's a Vanguard fund. And that one, unlike SPY, which is tech heavy, Vanguard is more finance and technology, so it's a bit more diversified, but it also pays a dividend of about 3.5%. So you kind of have two upsides there. You have a nice broad-based ETF, large cap stocks, and then in addition to that, it also gives you a dividend yield that you can obviously reinvest if you'd like to do so. The other two that you could possibly look at playing are also spider funds. One of them is SPLG, and the LG gives you an indication that the L in SPLG refers to large cap stocks in the S&P 500. So if you want the sort of safety of the big boys in the S&P 500, you can go and park a little bit of cash awaiting investment into SPLG. And the other one that you can look at is called SPYG. So SPYG is different from SPLG. The L is for large cap. And the other one, SPYG, are the growth stocks in the S&P 500. So the difference between the two is that the LG Spider ETF gives you a little bit of protection because it's large cap stock, so it's less volatile and perhaps a little bit less risky. And if you are younger and you have a good job and you're earning money on an ongoing basis and you can put a little bit more money into the market, you can go with the growth fund instead and invest in SPYG. So there are 4 ETFs that you can put some money into. And the reason why I'm mentioning these is because we know that there's a lot of money, hundreds of billions of dollars sitting on the sidelines. And this was cash awaiting investment to see what happened with the US elections. And of course, now that the US elections are finished and Trump won the election, you can expect the cash to come flooding into the market. The problem is you don't know where the institutional investors are going to put their money and put it to work. So what you do is you diversify your risk a little bit if you don't know where to put it either. And you don't want to be behind them, you want to get in front of it. Then what you do is, if you're sitting on cash, which is losing your money every single day, instead of doing that, you put some money into some ETFs. And if you view it as cash awaiting investment, that's fine. Otherwise, you can even hold these index funds for the rest of your working career and just retire very, very wealthy. So that's my story for today. I hope it's okay, and I hope everything's going well. And let me know what you think about the ETFs that I mentioned. Talk to you later. Thanks for watching. Bye-bye.